This is Martin here from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, daily stock market technical analysis show where we look at the charts and then try to understand what happened in the market during the day and plan for a better trade for the upcoming day. That's Wednesday, January 17th, tomorrow, 2024. So we had a flat day today, although it was very volatile, and let's get to see more details. This is a wrap here. We can take a screenshot of this if you like. We'll come back to this, but we begin with the charts. So it's going to be the plain candlesticks to begin with on the Nifty first. So what you see here is nothing but a spinning top candle. It's a small body, it's indecisive. The big size are equal on both sides with a small body of the candlestick. It can turn out to be bearish if a spinning top is there with huge volumes and then it confirms when the low of that spinning top is breached. Basically, it was also an inside bar, almost like an inside bar of the previous candle. So that way, market is taking a pause or consolidating. Banknifty, it's clearly indecisive with the doji, and it looks like a gravestone doji, which could be potential for a reversal if it confirms that with a price moving below the low of that. It can form a tri-star negative pattern and then lead to breakdown, but it's indecisive as such. If you see, looking back at this along with the trend line channel, we can understand that it's at the very top of that. So it's a pause or a consolidation at the very top, and it is also a breakout from a range rectangular box. Third day after the breakout, still more space left for the price. Some more space is left for the price to move up if you look at the rectangular box targets, and it's well above the 20 exponential moving average. While in the case of Banknifty, it is a large, little more volatile range. It was recovering since the last 4 days and 5 days. It's taking a pause ahead of tomorrow's Banknifty expiry. It still has not broken out of that range rectangle box, you can say. Still have not made new all-time highs. But in the case of Banknifty, even during a pause today, a new all-time high was made, and now it's not 150.55. The all-time high is 123.25. So that's how it is. Just to summarize, it has taken a pause and it's consolidating at the very top with a slightly lagging behind Banknifty, and a breaking out Nifty is what we are still at. So if you look at the levels on the upside, clearly all-time high of 22,125 first resistance, then 200 would be next because it's a rounding number. Then you have 2250, which could be a target of this box breakout. Then you have 300, 22,300, 22,400, 22,500 likewise. It's an uncharted territory because it is already above the Fibonacci extension, and it will be breaking out of the channel also if it further moves up. Downside, the first support will kick in at 21,928. And after that, 20 exponential moving average is at 21,572. Right, it's also in confluence with a close by support at 21,350, which is a Fibonacci 23.6. The 20 exponential moving average in confluence with the 78.6 Fibonacci extension levels, and if the next target will be 21k, which is a confluence with 61.8 retracement. extension, Fibonacci extension, and a 50 expansion moving average. That's levels of support on the upside and the upside. But it may not go that much unless a big correction comes in. Banknifty, similar. The first resistance will be the all-time high previously made, 48,600, 46 to be taken out. After that, 49,000 will be the major resistance in the upside. And looking at the target, if the breakout happens from here, it could go as close as 50,000 as well. This seems to be a 1,000-point range. Downside, if the first support could come in at 20 expansion moving average at 47,600, then you have support at 47,000, which is crucial. It's confluence of 23.6 Fibonacci retracement as well as the consolidation breakdown zone. That's breached, then you have 46,500, which has got a gap, which is in confluence with the 46,600 50 expansion moving average support also close by. So 47,000 is the worst case. This is for tomorrow, day after, a couple of days probably. Its levels are valid. So that's all. So let's look at the Bollinger Bands as well. You can still see that it's consolidation with a slight beginning of an expansion on the Banknifty, and Nifty also. It's beginning of a little more. It's confirmed that it's a upside expansion. So price is getting outside of the consolidation zone on both indices, with expansion has not completely begun, still in the consolidation zone, indicating sideways from the Banknifty, but expansion is confirmed in Nifty. So let's get back and summarize it. So the flat close, still meaning 22k on Nifty and 48k on Banknifty. Flat day of the 65 points and 33 points lost in Nifty and Banknifty, 0.07 and 0.29. Remember, we are in the middle of a 31+% of rally in the Nifty and 26% plus on the Banknifty. Last swing low itself, it has moved 16, 17, 18% on the license. So it's vertical up moves that has happened. Corrections have come in only hardly 2 to 3.5% on the indices. Intraday price action today was very volatile, and it finally ended close fact with inverted V-shape and then V-shape moves and all that, very volatile thing. At first it turned buyers after 4 days of selling, while DIs had turned sellers after 5 days of buying. That's data as of yesterday. Today's data has not come in yet. We'll have a look if it has come. No, not yet. Most likely good amount of buying might have come in, buying support might have come in from either of the institutions. Got to wait and some more time for the data to be out. Resistance support levels, I'm not repeating, we already seen that. Momentum is maintaining the bullishness. It's bullish rising on both the indices in the short term. Nifty also, and Nifty and Banknifty both. So there is a momentum range shift concept where the price confirms by moving up above the RSI 60 and then settling at RSI 660 back. So that concept is known as range shift. If you're not aware of that, check out the playlist for the technical analysis. You can find that in the momentum slides, the videos basically. So it's a range shift concept that is there in the Banknifty. That's what it's saying around the range shift, where it could bounce up and then move further up. But there is a negative divergence. It's not confirmed yet. That's there on both indices, where the momentum is falling while the price is moving up. That's about momentum, and it 10 degree radius is also close over the bull zone and it's still there. So there is bullish in the short terms, momentum on the short terms. The market had retraced a little bit today or post, or had a flat close. VIX also had a flat close today, 1.5%, right? 13.57. So VIX is not cooled off much, even when market is at the very top. So that means the fear of heights is reflected in the India VIX. Bollinger Bands we already studied. We know that it's an up move indicative of Nifty, and sideways consolidation continues to be on the band as per the daily charts. Bollinger Bands So technically you can see that it's a correct, it's absolute bullishness is what the market is. Nifty clearly break more, making all-time highs every day, even today when there is a red close. And corrections are coming in the bank to also only 3.5%. Right, that's too less for a vertical move. So markets may breaking further more if the Banknifty joins the party. That's what I will look out for tomorrow following the HDFC result that has come out positively. So caution has to be maintained. Probably not tomorrow, but if there is vertical moves that happens without major corrections, whenever the correction comes in, it may get 22,500, it may get 23,000. Whenever that comes in, it would be ferocious. That's all the problem. So you have to be just cautious about that factor when you're playing derivatives, options, weekly options, positional trades. Wow. So today's data, if you see, it's contrary to yesterday's industrial sector analysis. If you see, it's all red today instead of green like yesterday, except the FMCG and metals closed green. But all the sectors are maintaining the bullishness in the short-term momentum perspective. If you look at the major heavyweights that contribute maximum, it's again all red except the HDFC and ITFC, which is managed to close green. And across all the major 7 heavyweight stocks, you can see that the momentum is bullish, except for the bank stocks, which is still rising up sideways. HDFC Bank, Kodak Bank, these are still struggling to get back to the bullish momentum because the bank index is way little below, lagging from as compared to the Nifty. Now use the indices as some red at the top. Remember, US was rallying for the bottom and suddenly top with making all-time highs just like ours. A rally in the US rally started more at the same time when the US inflation was cooling off in the month of December beginning. So the dollar spiked up, showing some green, but the rupee also has spiked up. That was used INR's rise up and rupee is even more weak. Crude oil is spiking up, showing some green at the bottom. It's okay. It retraced substantially from the 93 levels to the 70 and is hovering around that zone. The shipping prices could make this volatile, so to be cautious and have a close watch out because your economy is dependent on this huge oil import that we do. Gold, the hedging instrument, is fallen. It's trying difficult to make the new all-time high after having hit the all-time high a few weeks back and then got sold off, but still consolidating at the very top. Momentum investing, this may be opportunity. Why the investors will have to wait for the next dip to happen. The trader's direction is very clear, but you have to be extremely cautious that corrections may be due after taking moves and it can come in ferociously in a time. So just be careful about the fact. And tomorrow we have the Banknifty. The levels for the Banknifty is showing very wide, very unusually wide. You have few hours for the expiry to complete, and it's the people have made bets on 49,500 for the next weekly expiry. It's tomorrow. 49,500. That's way too much. Downside, the highest support is in at 47,000. That's a very wide. Because HDFC result was out after the market hours, so option players had no idea where it could go because HDFC Bank contributes 15% or more to the index, and the index can fly. Both indices can fly if a breakout happens. So that's why this bet is made like this on the call side. Now the put call ratio is not that great, and it's a short build up in the futures why that happened today. Right? That's all I have. Let's go to the next scenario. Before we move ahead, let's just quickly analyze the HDFC Bank. If you're not invested on this, probably you may be missing out. But if you're invested on this for the last 2 years, you might be cursing. And tomorrow, there's a probability that it can break out and make an all-time high. That would be a breakout after 2 or 3 years. 3 years. and it could move around 500 points at least, right? If it has to meet the consolidation target. The volumes are not that great as of now, but yeah, so tomorrow since result has come, it can break out. Momentum is still not climbing the bull zones are trying to slip down. That's a weekly analysis we talk about, but daily if you see, last 2 days it was trying to come up to that, it was green. So tomorrow there is a probability that you can have a new all-time high. Okay. Pretty markets can surprise you, never know. Probably that may be a chance for you to do some moment investing when the breakout exactly goes above the 1760 or 61. That's the previous all-time high. And maybe if the market opens below that, that may be an opportunity for you to climb in, jump in. Even now it's attractive fundamentally. Technically also it makes sense because it's 500 points more that we are expecting. Right. That's all I have. So if you're not subscribed, please subscribe and share it with your colleagues so that it reaches out the max. And put in feedback, comments and suggestions. And manage your risk if the VIX is spiking up. Play it safe, and market direction is very clear. Go for directional strategies until the consolidation is confirmed both indices for some quite few days sideways. Until then it's bullish. Go for directional strategies and not option selling or non-directional strategies alone. Right? That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.